fractional ownership of real estate and fractional ownership of infrastructure is where the strength of the country will lie. So what have we done to facilitate this and to put the building blocks in place to facilitate that growth? The first thing is for us as a regulator to get comfort to go to retail investors, for us to go to our parents, to our in-laws, to our uncles, to our aunts, to our nieces and nephews to say, you know, this is a very good product, you should invest in it. We need to have that comfort. So the first thing that we have done is we have ensured that the governance elements of these asset classes and the disclosure elements of these asset classes are now something that gives us the comfort and gives us the confidence to go and tell our retail investors that we are comfortable with the way these things are structured, we are comfortable with the disclosure and the governance norms. You can now, without worrying, you can think about investing in these products. So that is one of the first things that we did over the last couple of years. The second thing that we have done is to bring down the minimum investment size, because naturally these products which were considered sort of high risk and therefore the minimum entry price was kept high, we have steadily brought it down, and the intention, the commitment to the industry is down the line we will bring it down even further. So making it very much affordable, as I often like to refer, this is the sachetization of financial products that we need to do. And with a very, very small amount, somebody should be able to go and own a fractional ownership of these assets. The third thing that we have done in this context is to facilitate innovation and to facilitate digitization of this whole ecosystem using the now, I would say, concept or framework that we have in the country of saying that there is public infrastructure and private innovation. So in the markets, while the infrastructure is not strictly public, for instance, the exchanges form the basic infrastructure, the depositories form the basic infrastructure of our markets, they do perform the role of public infrastructure, even though they are in somewhat private hands in a diverse and diversified manner. So allowing for platforms like the online bond platform, for instance, allowing now, you've recently seen the notification on small and medium REITs. The objective is that we should now facilitate many more smaller and smaller and smaller units of this ownership to be diversely held and democratically held across the country by our citizens. What is true for REITs is also true for InVITs. And we have a lot of belief in the way in which this infrastructure is going to grow in our country, because with every foreign investor that I meet, I find that the interest in our InVIT structures is growing by the day. There used to be trepidation that the way that the banking system, and we've all been bankers, Mr. Bhatia and I often laugh about it, we've burnt our hands ourselves in the infrastructure sector. We know the pitfalls of that, but the way that InVITs have been structured, the way that there are escrowed accounts, the way that there is a ring fencing against bankruptcy, all of those aspects have resulted in a high level of confidence that the investors now show in our InVIT assets. So there is a huge appetite for this. So for all the youngsters who are looking and wondering as to which area of the financial sector they should enter into, you're wondering where the high growth is going to come from, I can share with you that the level of investor interest, particularly from foreign investors in the InVIT space, is very, very significant.